Hello, making another video for you folks regarding futures and why I think personally you should be trading futures. So the title of this video is The Hidden Gem. Trading futures, what they don't want you to know. The hidden gem, trading futures, what they don't want you to know. Well, let's get into it here. Okay, let's go. I got a couple of questions here that I've got within the past 4.5 years. I've been closed 4.5 years. I have not been accepting members. I plan on opening up again for new members. As you can see here, it says it's been here for four plus years here. I'm happy with the group I got already in the forum, but a lot of people have been bothering me to open the forum back up within the last 4 years, like emails after emails. I don't know how many trials I got. I don't know why people are still filling out the trial when it clearly says, it says right here, closed, but people still sign up. I don't know why, but they do. But I'm sorry if I never got back to you. It's closed. So, I don't want to waste my time sending you email after email. But besides that, I'm already getting off topic. But this video is going to detail why I personally think you should trade futures and why it's a hidden gem and why they don't want you to know. And if you watch, I'll try to make the video short as possible, but there is a lot of information I'm going to be discussing in this video. People that are a member of the forum, members of the forum, they've, I'd say majority, if not all, now trade futures because they see the advantages of it. So let's go to the questions I got within the last couple of years. I put them into a section, a document here where I'm going to basically answer them one by one, so that if my wife or Alyssa, who's with the best traders now, gets these emails, they could just reference this video. This video will also have chapters below of the questions that are going to be covered in this video. So you can just go to the chapter and fast forward to the answer. I'm going to make it very detailed so that it answers hopefully all your questions. So let's do this. The first question: what is the difference between trading futures and options or stocks? So what's the difference between trading futures against options and stocks? There's many benefits with trading futures, and that goes along with micros, because now they have micros that they just came out with within the last year or so, and micros are a game changer. It's 1/10. If you're trading in the indices, it's 1/10 of the contract. I'll get into that more in detail further in this video. But with regards to the difference between trading futures and stocks, number one, you get to manage your position better trading futures, hands down. Now, of course, with anything, trading futures is risk. You're using margin, but with stocks and options, you can lose it all. If spreads are different. Call spreads are much different, and that's for a different video. I'm talking people that just do strictly options. I used to use options as hedges. Now I just use the micros because I trade full contracts, but futures contracts, not micros. But I could use micros to hedge, and that's the beauty. That totally elevated my managing of my trade. I find it, so let's go through the advantages. Number one, you could trade 24 hours a day. Futures, it's 1 hour from 5 till 6 p.m. You don't trade. Now, if you're trading coffee and wheat, there's different times. You can just, search the times that coffee, wheat, that you can trade futures. But majority of the times it's, 5 till 6 p.m. is the 1 hour basically break for futures. Then after 6 p.m., you could start up again. Number two, liquidity. You have liquidity within futures. If you're in a stock overnight, they do have stocks now overnight, mainly the main ones like SPY, IWM, QQQ. I think some brokers, you can actually trade that now 24 hours a day. They just implemented that actually within the last couple of months. I know Interactive Brokers, you can do it now. As I'm making this video, I think last week they did it. from what I was told. I don't know, but only the major stocks and ETFs you could trade, but there's a liquidity issue after hours. Not many people are going to be up there 24 hours a day, but you might have some issues, even with the major ETFs. But with futures, it's much more manageable. It's cheaper commissions, depending on who your broker is. But that's another question that I'll go over. But trading futures, you definitely have more control of your position. You could trade overnight. You got liquidity, unlimited liquidity. Whereas, futures, stocks, you could have an issue. Options, very highly risky. I see a lot of people getting into options that have no clue what options are about. You should definitely not dip in. If you're starting to trading, not dip into options unless you really know how the options market works. Lots of games being played there. You could sell premium, you could do all sorts of stuff, but that's for a different video. But I still prefer futures over options. That's just me. I would take options if it's low-hanging fruit. Many people in the forum know when I look for low-hanging fruit and it hits certain targets on our charts and everything lines up, block trades along with it. I don't do them all the time, but when it presents itself, I will pull the trigger with options. But just managing a trade, intraday trading, which is what I am. I'm usually, an intraday trader. Unless there's low-hanging fruit, I'll hold the stock for a long period of time. But majority of the times, I'm intraday trading. I'm in and out. Sometimes I'm in a position for 20 seconds, especially in 2022 with the amount of volatility we got in 2022 is insane. This has to be one of my best years as well. Trading, it's just, I love the volatility environment. I love, because I'm a pivoteer and I'm more in, out, target hit, out, take 50% down, let the rest ride. So it's all in the way you manage your trade. Like I said in other videos that you can see on my website or go to my YouTube channel where I discuss my packages and other videos that you could listen to. Where managing your trade is one of the most important things, right? So with futures, I tend to be able to manage my trade much better than stocks or options. Stocks, you're bound to a certain amount of time on market hours. You got your pre-market and after market, but it's not 24 hours. When a move happens at 2 a.m. and you're in a stock, you can't do anything. Whereas futures, you can go on for the ride, right? So you see what I'm trying to say? You have the hidden gem is you're bounded by timelines within stocks and options. Like you got to do them during market hours. Like, come on, what happens overnight in London, where a lot of the moves happen? If overnight, big moves, you can't do anything. You're trapped. Yeah, some you got to wait till 4 a.m. But even then, it's weird how it moves. It's because of liquidity, but with futures, boom, you got your price, you're in, you're out, and I see a big difference. Much in the cheaper commissions too. Like stocks are much higher, options higher per. Of course, you can make more money with options, but you're elevating your risk. Spreads are a different story, but you could lose everything with options, right? That's why that's for another video. I'm not going to mix that in, but if you're definitely an options player, you really need to look how options work, right? Because it's very risky, and I don't see why all these people are invested in options. And I'm like, why don't you tell how complicated options are and how much riskier it is to do options? Of course, futures is risky as well because you're margined, but micros took this to another level. Whereas people were forced to buy one contract before, when they have a very small account, it's dangerous. But the micros now that they introduced basically is 1/10, let's say, of an ES contract if you're trading the indices. They even have them for nat gas now, 1/4. I think it's QG, the nat gas symbol. But it's a game changer. The micros definitely are a game changer. So there is many advantages. The hidden gem is this: ETFs, 2x, 3x ETFs. They don't want you to know about micros. They don't want you to know about futures because, number one, The other thing is for tax. That's another question. But another advantage is the tax. I know in the United States, I think it's section 1256 of the IRS code in the United States. I don't know what it is for other countries, but you could look up, contact your accountant. But futures is definitely an advantage with regards to taxes as well. So there's so many more advantages of trading futures, especially now that there's micros, which is 1/10 of a contract that people could get in with a $10,000 account and trade just one micro. It's better than having one full contract, right? Which is a lot more. I think it's 10 to 12,000. I'm not even sure. I don't even look because I have, I know how many contracts I usually do and I just stick to it. But I think it's 10, 11 grand for one contract. But I think a micro is like 1,500. But anyways, or something like that. But your broker will tell you when you buy, you'll see how much you need, right? Your maintenance, overnight maintenance. That's I'm going to get into later, but mainly the hidden gem, ETFs don't want you to know about micros. And that's why ETFs are on their way out. You got ETFs, the decay in ETFs, the 2X, 3X, the trickery that all goes on there. There's been so many times where there's a 3X that's not even matching the price. It's totally off. And they even tell you. And there's 3Xs that blow up. You lose all your money. And good luck suing them. You ain't going to get any money. And it just happened to USO. Do you remember oil went negative? USO was like, and USO is a single, just, there's ETNs and ETFs. ETNs are even worse. ETFs are better than ETNs, but you could look up the difference. But it's not guaranteed to follow the price. And now remember, these ETFs and ETNs, they follow the futures price, right? So why not go to the root, which is the future? You're not going to get tricked, or it's and now you have micros. So that's why a lot of people are transferring to, are now starting to get into futures, which is the smartest thing to do. It's the best thing I ever did back in the day. I started trading futures as of 12 years ago. And that was the best thing. But now these micros are getting a lot of people that have smaller accounts into futures. And once you go to futures, you never go back. You're going to see the advantages of trading, especially now. Like I said, there's micros. So there's huge advantages trading futures over stocks and options. Like I said, unlimited liquidity, tax benefits, lower commissions, able to trade overnight. Whereas stocks, you're trapped and you could take positions overnight if something happens in London time or Asia time, 9, 10 p.m. You can always take advantage. You only have, with regards to indices, from 5 till 6. After 6, how many times you see a move after 6 and just, gaps down, and you can take advantage of, filling in the gap if it's set up, or, Asia opens or London opens at 2, 3 in the morning. You see a move. Oh, wow. And then ride it up all the way to close, to open. It depends. There's so many advantages. So hopefully that answers your question. Futures is definitely the way to go. It is the hidden gem. And that's why I called this video the hidden gem, what they don't want you to know. ETFs are probably on their way out. A lot of people are already switching. A lot of people see, an ETF could blow up. Like I said, how many times have you seen ETFs go to zero? With VIX products, not gas products, oil. There was a 3X oil that went to zero. Everybody lost. And you can't do anything. Good luck suing them. Like I said, they trade off the futures price anyway. You might as well go to the root. Right? So that answers that question. The second question is, are there any tax advantages trading futures which could lower your tax on capital gains? Yes. Talk to your accountant. Like I said, if you're from the United States, you could reference the IRS code. I think it's 1256, if I'm not mistaken. I'm not from the U.S., but I know from many people telling me. In Canada, there's advantages as well. So whatever jurisdiction you're from London, I suggest you speak to your accountant, a good one, and he'll tell you what the tax code is for your certain jurisdiction. But for many jurisdictions, futures is the way to go. You will save more on your capital gains. So definitely, like I answered this question in the last question, what's the difference between trading futures, options, and stocks? I went over the tax advantages. So there's definitely tax advantages with trading futures too. than stocks and options. So that's another advantage. That answers that question. And same with micros, right? When I refer to futures, I'm referring to micros too, because they're the same thing. What's another thing? I get a lot of this. Does the PDT, which is a pattern day trader, that's what it stands for, PDT. Does the PDT rule apply to trading futures? No. So a PDT is a pattern day trader. And I have this, some people get locked in this because I know in the United States, a lot of people that don't have a big account, over $25,000, if they do more than 4 day trades a day, they could be flagged as a pattern day trader, which is called PDT. And they're stuck after that. Trading futures, you don't have that rule. And that actually goes, another benefit of trading futures. You will not get flagged for a PDT trader, a pattern day trader. There's another benefit. Because some people that are getting into trading that want to build a small account, it's tough. Sometimes you need to make multiple. In this volatile market in 2022, believe me, you're going to be doing more than 1 trade a day when you have you have these indices are moving 20 points in literally 10 seconds, and 20 points, what it used to do 10 points a day back in the day, it's doing in literally 10 seconds. So in 2022 was crazy. So if you're watching this video in 2023, 2024, 2025, go back to 2022 and look how volatile it was. It was a beautiful market for me this year. I love it. I love volatility. I'm more of a sniper, as many people know in the forum. But so what is a pattern day trader? Exactly what I said. Consider a pattern day trader if you execute 4 or more day trades within 5 business days, Monday to Friday, provided that the number of day trades represents more than 6% of your total trades in the margin account for the same 5 business days. So basically, if you do 1 trade and then you do another trade and then you close out those 2 trades in 1 day, even pre-market, by the way, or after market till like 8 p.m., it's still considered a day trade. You have to wait till the next day, after 4 in the morning or whatever, to sell that, and then it won't be considered a day trade. So anything within the same day is considered a day trade. And if you do 4 or more of those in 5 business days, you get flagged by your broker. By law, they have to do it. Now, the benefit for Canadians and some other jurisdictions is they have their own, basically, SEC. Canada has its own, and the PDT rule doesn't apply to Canadians and some other places. I'm not sure, but I know in Canada there is no PDT rule, so you don't have to worry about being a pattern day trader in Canada. And some other jurisdictions, I'm not sure what they were. I know in Canada though, no, or you need to have over 25,000 in your account. So if you're from the U.S., for sure you could be labeled as a pattern day trader if you do more than 4 day trades within a week, 5 business days when the market's from Monday to Friday. So I know a lot of people that don't have over 25,000 get flagged with this, and then they're screwed. They can't even do options. It locks their account basically. And they have to get over 25,000 for them to be able to day trade again. So from what I've heard from people, it's a pain in the ass. It's good for Canadians. They don't have this sort of rule. I didn't even know that. An actual, someone from Canada told me that. So that's good because I think it's stress. I think it's a horrible rule, especially in 2022. It's crazy. They are like, oh my God, I can't sell. And then the next day it goes down. The only reason why they didn't sell because they didn't want to be flagged. That's so crazy, but it is what it is. But that's unfortunate. But this is the beauty of it. Trading futures, this is the beauty of it. This is another advantage of why it's the hidden gem and why you should trade futures. There is no PDT rule when you trade futures, micros, futures. There's no pattern day trading rule. So you can do as many trades as you want and you won't be flagged. That's another advantage for if you're trading from the States or London. You won't be flagged as a pattern day trader. So there it is. So if you want to read up more on pattern day trader, I'm sure many people already know about this if you have less than 25,000. So you already know about this, but I just wanted to show the benefits of trading futures, that you won't be stuck in this PDT flag. If you want, like I said, if you want to read up more, do some searches, and I just basically covered it. But if you want to, I'm sure many people already know what it is if they're from jurisdictions where this PDT rule applies to you. Okay, that answers that question. So let's go to the next one. How much does it cost per micro futures contract or futures contract? Because they're different, right? Futures contract is a full contract. The micros are 1/10. This is if it's indices. How much does it cost per micro futures contract or futures contract? And please explain rollover in futures. Okay, yeah, there's rollover in futures. Remember, you're trading a certain month, right? So right now, in ES that I trade, we're in the December. I'm making this video on Thanksgiving, actually. It's a day off for me because I'm on US hours. It's Thanksgiving today. It's November the 24th, which is Thanksgiving in the United States. So it's after 1 p.m. The market's already closed. And I have time to do this video, so I decided to do it today because many people have wanted this video. Because majority of the people, if not all, in my trading forum trade futures. Some trade micros, some trade full contracts, whatever it is. But majority of them do, because many of them before traded stocks, but they've switched to futures because after listening to this video, you'll understand why. There's way more benefits in trading futures, which is one of the reasons why I wanted to make this video finally, because so many people have been waiting for it. I just had the time to do it today, so I'm doing it. And it will be up sometime next week, or maybe even on this weekend, where, like I said, it will be in chapters below. You could just reference the chapters and learn why. I'm actually going to give this video for people that sign up to the forum. When I open the site back up to new members, which is soon, this video link would probably be in the email that you're going to get when you want to, for a free trial, or you purchase a membership package. I'm going to include this in. So hopefully you understand the benefits of trading futures, micros and futures, than stocks and options. And even for hedging, like I said, which I'm going to get later into this video. So how much does it cost per micro futures contract? You could go to your broker. I know your broker will tell you how much you need per contract. So one micro, I think, is around 1,500. I think. I'm not even sure, but last I heard it's around 1,500. It depends. If the market gets very volatile, they change the margin requirements. I don't know how many times they changed the margin requirements in 2022, but a lot. As the market gets more volatile, they change it, and once it slows down, they bring them back to normal. So I think it's around 1,500 per micro, and a full futures contract's around 11 grand, and that's including overnight maintenance, because you need to have overnight margin as well, and you need to have enough in your account for that overnight. But micros, if you have a $5,000 account now, you could start with one micro, literally. Whereas before, you needed to buy the full contract, right? And it's big, especially in this volatile market. You can get crushed even from one contract if you even have a $30,000 account. So the micros is a game changer. Like I said, you can manage your trade overnight. There's liquidity. There's so many more advantages of trading micros and futures than stocks. That's for sure. And even options, if you're especially new to trading. Options is a no-no. You got to really know what you're doing and learn from the right people with options. But if you do know, I like using options, like I said before, when it presents itself. But spreads, call spreads and options, that's another story. That is much more safer. But that's for another video that I'll do later. But selling premium, there's all kinds of things you can do with options, but I don't want to get into that now because this video is about the hidden gem of futures, which I suggest everybody should be switching to micros for sure. You will easily be able to manage your trade better with futures, hands down. And hopefully this video convinces you that futures is the way to go, especially because there's micros now. So that's the cost. You're looking at about $1,500 per micro. Like I said, you would have to look up your broker. Your broker tells you how much you need, so you could just reference your broker, and they'll tell you. There you go. With full contracts, about 11 grand, I think. I'm not sure. I know how many contracts I trade. The last I looked, I don't even look how much it is now. If you have a nice sizable account, like, do you really care? You know what I mean? But if you're interested to know what it is, you just go to your broker and it will tell you how much you need for each contract. But I think it's like 12,000 per contract, full futures contract. Micros around 1,500, but they vary between each security, right? So if you're trading gold or silver micros, it might be different than the indices micros. But like I said, your broker will, whoever you're using to do your trades, I use Interactive Brokers. It will tell you what the cost is before you actually even take the position. And there's cheaper commissions. That's another thing, the difference between futures and stock. Like, you're paying $2, I think, for micros per micro, $2.20. Like, stocks, you're paying a lot more per trade. So you even save more on commissions. There's another advantage. You save more on commissions trading futures than stocks and options. So it's a no-win situation here. And you'll be able to better manage your trade too. Hedging your trade, like I said, you can use micros now. I use micros to hedge where I used options before. So if I'm in ES now, I'll just bring up MES, which is the micro for ES, and hedge through the micros, where I actually win on both sides. Whereas before I had to do options, but when the micros came into, I changed my managing of my position and included the micros, because it's really 1-for-1 with the futures contract ES. It's like 1-for-1, like 0.25. It's so even. That's what I do. I find it much easier, and you'd be surprised how many times I hit both sides, long and short, with my hedge. Especially, like I said, in this market environment in 2022, where there's volatility up and down like crazy. Literally, 20, 30 points in 10 seconds. So that answers that question. Where can I find the micro future symbols? So I have it here. You can just go to CME or just do a search, whatever you want to trade micros symbols. So, futures contracts for the S&P is ES. For the Russell, it's RTY. For the NASDAQ, it's NQ. For the Dow, it's YM. But micros have different symbols, right? So here's your ES, which would be the S&P 500. It's MES, right? Z would be the December contract, which I'm going to get into in another question of the months. So you're trading months in futures. You're going to have to roll over as well. I never explained the rollover. So let's go back to the other question there, because it said there, how much does it cost per micro futures contract? And please explain rollover. So here's from the CME group, where basically, instead of me talking about it, I'm just going to play this video. And this video will detail what exactly the futures expiration is. So I'm doing this video, like I said, on Thanksgiving, November. So the expiry contract on this is December, which is Z. That's the symbol month for the futures. And these are the symbols, right? So you have January. So next year would be, I know Nat Gas right now, we're trading Nat Gas. We rolled over to January of 2023. So Nat Gas's symbol is NG, right? I think it's QG for micros, which is 1/4 of a Nat Gas contract. So that would be, if you're trading futures, it would be NG, F for January, and then 3 for 2023. So for, let's say you're trading the micros now with ES, it would be December, right? Because that's the next month. And it would be MES, because MES is S&P futures. So it would be MES Z2 for 2022. You get it? So let's get into the futures rollover. When you roll over the contract. So let's say you're in you're in December contract in ES and it's coming close to expiry, which is in December, and you need to roll over to the next contract, which would be like, March. I think that will be the most liquid one. So it would be like MES, because March is H. So it would be, because we're going on next year, which is 2023, it would be MESH for March, 3 for 2023. Not 2, because 2022 is coming to an end. As I said, I'm doing this. And right now, the futures contract for ES, which is the full futures contract for the S&P, for the micros, it's M as in Mary ES, would be MESZ2, Z for December. So let's understand contract rollover. You don't want you're going to have to roll over your contract. So you're going to have to buy March, let's say, of 2023, which would be MESH3 if you're doing the micros, and if you're doing a full contract in S&P, it would be ESH3. Hopefully you understand this. If you need more details, you can Google it, ask your broker. But this is how futures works. It goes by monthly contracts, and when they expire, you need to trade the next contract. And as it goes closer to expiry, the amount of contracts being traded on that month goes severely down, especially when it's close to the end of expiry, which is why you want to roll over to the next month that majority everybody's trading, because then it's more liquid as well. So I'm just going to play this video that explains to you the futures expiration and contract rollover. If you need more information on this and you still really don't understand it, do more searches, or you can send me an email or in this YouTube video, post a comment below, and I'll try to help you more. Here we go.
Futures contracts have a limited lifespan. When you trade futures, you need to be aware of expiration dates, as this will influence the outcome of the trades and your exit strategy. There are 2 expiration-related terms that are particularly important. First is expiration, and the second is rollover. A contract's expiration date is the last day that a trader can trade that contract. This can occur on the 3rd Friday of the expiration month, but varies by contract.
3rd Friday.
Prior to expiration, a futures trader has 3 options. Offset the position to fully close out the trade. Roll the contract from the current or forward month to a future expiration date. Or to let the contract expire and take delivery.
Take delivery, you need large.
Or liquidating a position is the simplest and most common method of exiting a trade. When offsetting a position, a trader is able to realize all profits or losses associated with that position without taking physical or cash delivery on the asset. To offset a position, a trader must make an opposite and equal transaction to offset the trade. For example, a trader who is short 2 contracts of WTI crude oil expiring in September will need to buy 2 contracts of WTI crude oil expiring on the same date. The difference in price between his initial positions and the offset positions will represent the profit or loss on the trade. Rollover is when a trader moves his position from the front month contract.
I usually just close it out. That's just me.
Traders will determine when they need to move the new contract by watching the volume of both the expiring contract and the next expiring contract month. A trader who decides to roll their position may do so at any time before expiration, but can risk much lower liquidity as expiration nears.
Be harder.
Example, a trader who is long 4 contracts of the E-mini S&P 500 expiring in September will simultaneously sell 4 September ES contracts and buy 4 December ES contracts. If a trader has an offset or rolled his position prior to contract expiration, the contract will expire and proceed to settlement. At this point, a trader with a short position will be obligated to deliver the underlying asset under the terms of the original contract. In some markets, this will take the form of physical delivery, and in other markets will be settled through a cash delivery. You have choices when it comes to expiration with your futures positions. Understanding your options for managing expiration is an important aspect of managing your trading account.
So that basically gives you enough rundown. You could read this too. If you have more, if you're still not sure, you'll get used to it. It's a pain in the ass sometimes when it's coming to expiry, because it's like, oh, now I got to roll. I got to bring up my charts again. I got to put in the new symbols. I got to start up everything again. But it is what it is. You have to do it. Especially when it's coming near to rollover. You're still in the contract. Everybody's like, oh, it's the next contract. You'll see what I mean. But it's a pain in the ass sometimes, but it's still well worth it. It's just you have to do all your charting again for the new symbol, right? The new contract. And then some guys on the next contract, but you're still on the existing contract because there's still time. And you got two different levels. And you're like, oh, you're on the January contract. Oh, I'm still on the December. You know, it happened with Nat Gas recently. I was looking for a 758 target. They're like, oh, I got, 8. I'm like, what contract are you on January? I'm still in December. So you see what I mean? It goes by months, right? The third week of each, whatever the month expires, is when the contract of that certain month expires. But hopefully that gives you a more detailed information, that video I gave you, and it helps you. But you have to know these things when you trade futures or micros. So back to the micros. That's covers the question with the rollover. Back to the micros of where can I find micro future symbols? Right here on the CME group, this would be MES, which is ES, which is the S&P. There's even cryptos. There's even crypto. There's metals. MGC is gold. SIL is the silver micros, which is 1/10 of a futures contract. Once again, micros are 1/10. This is the indices. So the micro metals is 1/10 of a silver position. 1/10 of the gold is 1/10 of a full contract in gold. The MES is 1/10 the contract, a full contract of ES, S&P. So the micros are a game changer. Crude oil is MCL, which is 1/10. There you go. Treasury yields. You got so much. There's many more. They even have them for copper now, I think. Now copper. And I think majority down the road, we're going to have wheat. We're going to have coffee. I think everything is switching to micros. ETFs, ETNs are on their way out. You got decay in those ETFs. 2x. How many times have you seen the decay? You don't get that with micros and futures. You got the price. By the way, like I said before, they trade off the futures price. So why are you trading those ETFs? Yeah, they can compound. If you get the trend right and a 3x, you can make good money, because you know how it compounds. Like if it decays down, it could decay to the upside too. It's the actual opposite. So you got to get a trend though. Whereas, futures, you're in, you're out, being able to manage it better. So there's many more micros. You could look at the different types of micros they have. You could do a search in Google, what do they have micro futures for? But they're having them a lot. They have them for the metals. They have them for Bitcoin. They have it for now copper. I think they have it. Coffee's coming. They have it almost for everything now. They're getting micros for everything. And it's a game changer, guys. It is a game changer, micros. Big time. So crude oil, they have it for the most popular, what everybody's trading right now, they have them, micros. So like I said, definitely a game changer. So there you could find the micros, the symbols. Or just look at your broker. I'm sure they have the symbols there too. Call them up. Say, where's the area of where I can get these micro future symbols, right? And they'll tell you. They'll tell you where the symbols are. So that takes care of that. What else is there? Where can I find micro future symbols? Okay. What are good platforms to use for trading futures along with market data? I personally use Interactive Brokers. I find them to be the best. They're stable. I know many others, especially in 2022 and during COVID in 2020. You had those Robinhoods, which Robinhood's just disgusting. They sell your data for market profile data. Free commissions, but you're getting, horrible entries. I find Interactive Brokers, when the market's very volatile, I find them to be very stable. I know people trading other platforms, they got disconnected. Imagine with volatility, and you can't get into your trading account to sell or go long or to get out of your position. You can get destroyed. I don't know. I found with the volatility, Interactive Brokers was very good. Their commissions are the cheapest. So if you're looking to trade the futures, I know they've actually switched to Interactive Brokers. They used to be with another broker, and they've thanked me for switching because they're paying lower commissions. Even if they're trading stocks or options, it's lower. So Interactive Brokers definitely has a good thing going for them. I find them to be stable. I know some people don't like them, but I never had a problem with them. To each his own. What you like is what you like. What I like is what I like. I like it. It's been good to me. Stable when I'm in there. Of course, you get sometimes your odd hiccup, but I think there's many other brokers out there that have been way, way worse. So you're getting cheaper commissions with Interactive Brokers. And by the way, like I said before, trading futures, you're paying cheaper commissions anyway, which is another hidden gem why futures is better than trading stocks. With all those other points I told you, overnight liquidity, you could trade overnight, tax advantages, just way more better. And I hope people really listen to this video and understand that, like I said, that ETFs, ETNs, they're on their way out. So many people I've got screwed before in a 3X like 10 years ago, where it just went down. I remember TVIX. People in the VIX got crushed. Went to zero. What are they going to do? I'm going to sue you. It clearly states good luck getting the money from them. They tell you this security is risky. And they have all their lawyers. They got the best lawyers in town, my friend. You ain't going to get anything. Even class action lawsuits, they took forever to settle. And some even lose. Most lose. But, it is what it is. But these micros, like I said, are definitely a game changer. So that takes care of that. So what are the good platforms? Like I said, Interactive Brokers. I think it's like $2.20 per micro per contract. It's cheap. You could do so many trades a day. It's like, boom. Sure, commissions add up, but that's cheap compared to other brokers. So, like I said, a lot of people signing up to the forum, they've switched to Interactive Brokers and they switched to futures. They see the advantages of futures. I don't have to make this video for them, but anybody new coming into the forum or anybody that's just searching the internet and want to know about the difference between futures and stocks and options, hopefully this video clears up that futures are the way to go. I don't know what more I could say to convince people that they should be trading futures. You're definitely on not a level playing field trading stocks, especially if you're trading IWM or QQQ. You're not on a level playing field. Now that they have micros, you're not on a level playing field. Like I said, you have so many more advantages with the micros, and that's why I think, like I said, ETFs and ETNs, they're on their way out. I could see the next 2 or 3 years things totally change, especially that more micros are coming into, like I said, for coffee, for copper, platinum. They have them already for platinum, I think. I know copper, I think they have them. They're about to get them. But they're definitely probably going to have them all in the next couple of years, maybe even by next year. Who knows? They see people are starting to figure it out, right? And hopefully this video convinces you that, oh my God, all these years I've been trading stocks that are against me. I'm talking like indices, commodities, silver, gold. More if you're an intraday trader, futures is the way to go, especially now that there's micros. So, what else? So these are the monthly contracts. I guess I went over it already. Like I said, trading the contracts, these are January. I've already discussed this. Like if you had a symbol MES for January, it'd be F for G. So these are the symbols that you use for the monthly contracts. But like I said, if you want more information with this, you could contact your broker. But there's a lot more information online if you really want detailed information on what the symbol is per contract. But this is the symbol. These are the symbols that I'm showing you here. So you can even take a snapshot of this, print it out, and then you have the symbols. But like I said, for the year, you put 3 or 2. 2 would be for 2022. 3 would be for 2023. If it was 2024, it would be 4. So for January of next year, it would be, if you're trading micros, MES, because that's the micro future symbol for ES. So it would be MES space F3. F for January, 3, because that's the contract you're trading, 3 for 2023. hopefully it answers your questions. I don't want to make this video too long, guys. If you still need more information, you could do some searches on YouTube or Google, and I'm sure you'll figure it out, or comment below on this YouTube video and I'll try to help you out further. But hopefully this video just explained to you that when you're trading futures, you're trading a specific month, a contract, a month, and those letters there dictate the month you're trading. So I just covered now what are good platforms to use for trading futures, along with market data. That's right, market data. I forgot about that. Market data, one of the cheapest market data, real time, is Interactive Brokers too. So you should be switching. I personally like Interactive Brokers. It's cheaper commissions, and the market data is even cheap. So you need real time level 2 quotes, especially if you're trading futures level 2, and it's cheap. You could contact Interactive Brokers and see the packages they offer, but I know for a fact that they're cheap to the brokers out there. So that's why I said, and I'll say it again, I highly recommend that everybody from the forum switch to IB, because it's just much cheaper commissions, more stable. It's very stable. I use Book Trader to trade futures. There's a function called Book Trader in Interactive Brokers, which easily gets me in and out of positions using Interactive Brokers. So you can just look up Book Trader in IB. They have some documentation videos there that show you how to use Book Trader. And that's what I use to get in and out. They're quick. It's like a video game, actually. It's like, I'm sure people on the forum see it, and sometimes I do some Twitter videos to show you how the platform looks. And it's just like, you don't type in the level you sell. It's just like, you just drag it. It's like a limit order or sell order, and you just drag it on the platform, and you get in and out quick. Whereas, all these other brokers, you got to type in the number, which is horrible. By the time you do that, especially in this market, it can already move 10 points. Whereas, Book Trader and Interactive Brokers, it's instant. Half a second, boom, in and out. So you could reference the videos within IB. And that's another thing with regards to futures. You can definitely get in and out of a trade very fast, especially if you're using Book Trader, which I use for futures. And you have all the multiple levels. Level 2, you have all the symbols. But you could reference videos, like I said, on Interactive Brokers that goes through Book Trader, which is what I use for futures. It's called Book Trader. Then they have Options Trader if you want to use for options. But like I said, I trade futures 99% of the time, and I just use Book Trader. So what are good platforms to use for trading futures? I give Interactive Brokers. I don't know about the other platforms. I switched a long time ago. Even for market data, like I said, it's cheaper, much more beneficial, much more stable. What are micro futures margin requirements? That's another question. So margin requirements, your broker, like I said with IB, if you're trading with IB or some other broker, they tell you the margin requirements you need. And I've already answered this question for, there's a thing called overnight margin you need as well, maintenance. But all that information is given to you in your broker. But like I said before, I think 1 micro ES, which is 1/10 of a futures contract, is $1,500. A full contract is around $11,000, $12,000 right now because of the volatility. What are micro futures margin requirements? That's the beauty. What are micro futures? Yeah, that's the margin requirements. Just look at your broker. I don't know. There's different for each security, right? If you're trading gold or wheat, there's different margin requirements and different prices. So I'm not going to go through all the prices. You can just look up at your broker and they'll tell you what the prices is. And I think it's even on their website. What are micro futures trading hours? Futures and micros. I've already covered it. It's 24 hours, except 23 hours for the indices. For gold, silver, same thing. But if for like wheat and coffee, there's different times. You're going to have to look up the times for coffee and wheat. Just do a Google search, or like I said, look at your broker. They'll tell you the times. But mainly for indices, gold, silver, it's 23 hours a day. 1 hour break from 5 till 6 p.m. And then after, you're ready to go. So basically, it's 24 hours trading futures. It's It's a given. Whereas stocks, like I said, overnight in stocks, you can get stuck, right? So that's the benefit of trading futures. After hours. Micro futures trading hours. Big benefits. So is trading futures good for scaling in and scaling out of trades? There's another advantage. Using micros or futures, it's the best to scale in and out. I just went over this with Book Trader using for IB. It's so easy to get in and out of a trade. You could use micros for scaling down. So instead of using ETFs, those 2x, 3x, now that there's micros, it's, a $5,000 account, you could use like one micro now, or 10,000 or 15. The micros now could be used for scaling in or swing trading, right? So if you need to hold a trade for a week or two, you could definitely use the micros if you don't have a larger account. Like I said, micros are 1/10 of a futures contract. 1/10 if you're trading the indices, right? Same with oil and silver and gold. But like I said, they even have them for nat gas, which is 1/4. But look up the particular security that you're trading in for your micro, and I'll tell you. But majority of the indices people trade, it's 1/10. So micros give you the advantage now to swing trade. Definitely. Intraday trade, it's like you're day trading. If you're day trading, you should be using futures, hands down. Hands down. Better entries in now, liquidity, everything. I just went over the points. So even for swing trades now. So people that are buying SPY, QQQ, IWM, there's no need. Like overnight, now that the brokers, they give you 24 hours, I think, now you can trade IWM, QQQ. Still, you're going to have a liquidity issue overnight. You will. And they just introduced that, these brokers. But I would definitely go with the micros if you don't have that large of account. And it's much more manageable. Like I said, if you have a larger account, I use micros now for hedging. Where if I'm long ES, which is the S, ES is the symbol for the S&P. If I'm long 10 contracts and I need to hedge, and I'm like, you know what? I'm not going to sell. I'm going to keep 50% of my position, but just in case, I'm going to hedge with micros. You could hedge with the micros, and you're still keeping your long, and it goes down, you get your pullback, and you're like, yeah, this is a buying opportunity. I'm going to cover, right? And you still have your long, and it goes back up. You still have your long. And then it hits your target. You just won on both sides. You won on your hedge, and you won on your long. Whereas before, you needed two accounts, and you could still set that up in IB. You can have two accounts, which I used to have. I still have them, where you need to transfer to the other account, and then you can go short on the other account and long on one account. But it's just a pain in the ass switching money to here, money to here, money to here. Just go to the same monthly contract, and it trades 1-in-1. Like I literally put ES in the micros, MES, which is the symbol for the micros, on two screens, and I see them 1-for-1. It's perfect. And that goes with the Russell. The odd occasion, it's not. Like 99.9% of the times it is. So I just find, transferring it to my other account. I don't even use it anymore in IB, my other account. Like I said, I just use micros to hedge. It's the best thing. I love micros. I use them for hedging. Sometimes I'd get in micros. If I don't want to do that many contracts, I'll do 30 micros, and you could take bit off. 5 micros here, 5 micros there, 5 micros there, right? Whereas if it's a full contract, you got to take the full contract off. So is trading futures good for scaling in and out of trades? Absolutely. Like I said, you could do, you do 10 micros, you take 2 off, 2 off at this level, 2 off at that level. Whereas if you're trading the one futures contract, it's just one. You got to take the whole thing off. Whereas micros, you could take bit by bit, especially if you don't have a large trading account. Where you'll see me in the forum sometimes, I say, taking 50% off here. If you're doing 10 micros, let's say you'd take 5 micros off. That's 50%. Taking down another 25% here. You took 2 micros off, then another 2 micros off of your next target, and then 1 micro at your final target. So there's your 10 micros. If you're doing 20, I'm taking 6 micros off here, 5 micros off there. You're managing your position. Where if you're doing full contracts, you got to take the full contract. So micros, like I said, game changer, makes you very, very very easily being able to manage your trade with micros. It's a game changer. I don't even know why people are not switching. It's the best thing ever, for especially people that don't have large accounts. So trading futures, good for scaling in and out of trades. I just gave you an example. Of course it is, especially using the micros. You can take so many, 1 micro off here, 2 micros. So if you're doing 10 micros, which is 1 futures contract, 10 micros, remember, a micro contract is 1/10 of a futures contract. If you're doing 10 micros, you can take bit by bit off. 2 off here, 3 off here. Whereas a full, you have to take the full thing down. So micros is definitely the way to go for scaling in, swing trading, trades, holding trades for, a week, 2 weeks, 3 weeks. Why would you want the ETF or the ETN? You have more. You would go with the micro. Of course, there's risks because it's margin, of course, but there's risks in stocks too. But that's up to you to being able to manage your trade. I'm just talking about being able to manage your trade, getting in and out at certain targets, being able to get in and out quicker. There's more liquidity. So I still find futures being much more much more of an advantage than trading stocks. Don't be going leverage full. Or, you got to be able to really manage your trade, and that you have to come up with a strategy, a plan for how much money you have in your account. Which leads me to my next question again. Can you use micro futures for intraday trading and or swing trading? So I kind of just covered this in the previous question. If trading futures is good for scaling in and out of trades, so I'll repeat it again, I guess. Can you use micro futures for intraday trading and or swing trading? Absolutely. Intraday trading, day trading, you're going to trade stocks in and out. It's just, micros is just, especially overnight. Like I said, if you're in a stock, especially a popular stock overnight, you don't have that, you have liquidity issues. Whereas with the micros, you don't. The only difference is with, like I said, with micros, because it's futures, you're leveraged, right? Severely leveraged. So you definitely have to know how to manage your trade, because you can get yourself in trouble. Just like you can get yourself in trouble with stocks too. There's margin in stocks too that people use ridiculously, which is stupid because that's how you blow up your account. So I'd say majority of the people are using margin in stocks. I don't know. I could be wrong, but I think so. Then you have options where you can totally lose everything. If it doesn't hurt, if it doesn't hit your certain month and your expiry date in time. But like I said, with options, spreads are different. That's for another video, which I'll do later in the future. But for futures, intraday trading, swing trading, definitely the way to go, futures. And if you don't have that much money in your account, micros. I just explained to you why. You can take, let's say you're doing 10 micros, right? Because micros is 1/10 of, and you're trading the S&P. You could take bit by bit off towards your target. And the other thing is, what if something happened overnight at 3 in the morning, Japan or Asian time, 9 p.m., or after 6, or 6 in the morning, or 5 in the morning, 3 in the morning? I know some of these ETFs, these major stocks, you can only trade after 4 a.m., but what if something happens at 2:33? You can go on for the ride with the micros or futures and catch that gain. Whereas before, you have to, people with stocks, that's why I call this the hidden gem. People are like sitting, they can't wait till the market opens because they're stuck. They can't do anything. But people that are trading futures can. You get it? You're getting screwed over if you're trading stocks. You're getting screwed. There's so many more advantages trading futures. Like I said, now that the micros are into this game, into the playing field, you're definitely at a disadvantage not switching to micros or futures. Definitely, especially if you have a smaller account, not trading futures because now there's micros. Of course, like I said, there's risk with everything. It's leverage futures, so definitely, play with it first, practice, see how it works, see how the monthly roll works. You can practice through a practice account or whatever. Research it, but hopefully this video clears up a lot as to why you should be trading futures. It's going on an hour. I didn't want to make this video more than an hour. It's at 59 minutes and 30 seconds, and I'm going to end it. And that was my last question. So, in conclusion, The hidden gem, what they don't want you to know about futures. Let's recap. Number one, ability to trade overnight. Whereas stocks and just most recent, some brokers, you can trade those famous ETFs, SPY, QQQ overnight, but you're going to have a liquidity issue. Overnight, you could trade. You can go on to positions overnight. You could swing and day trade now with futures because there's micros of people that don't have a large account. It's 1/10 of a futures contract if you're trading the indices. So you could definitely manage your position better. If you're doing 10 micros, 5 micros, you can take off 1 micro here, 1 micro there, 1 micro there. So you're seeing what I'm getting. Whatever you want to do, however you manage your position, you definitely have more of an advantage trading micros. Number 3, you get better entries with futures because of liquidity. You get way better entries, especially if you're using IB, like I use Book Trader. You can see on the forum that I sometimes put some pictures, and on Twitter, I show the platform in and out. You're not typing in a number where to sell. It's just visual. It's like a video game. You just move your limit up and down, and you're in and out within a millisecond if you're really fast. So you definitely have better entries, better exits. If you're from the States and you have under 25,000, and especially in a market like 2022, you don't get the pattern day trade rule, the PDT rule. You're flagged as a pattern day trader. More than 4 day trades a week, which I covered in this video. In other jurisdictions, I know in Canada you don't have that, but if you're from the States and majority of the other jurisdictions, you can get flagged with that if you don't have over $25,000 in your account. So with futures, you can do as many day trades as you want a day. There you go. Number 5, tax. You save more money on tax, especially if you're from the U.S. You could look up the IRS code 1256 and other jurisdictions. I'm pretty sure you have favorable advantages with regards to your tax code of your jurisdiction, whatever country you're from. It's more of a tax on your capital gains. Futures is much more better. The only thing is with futures, you have to know how the margin works. Which I discussed in this video as well. You can just go to your chapter, how much it costs per futures contract or per micro contract. Your broker will tell you. And of course, with everything, there's risk. You are leveraging using futures, even micros. But, I still find it beneficial to use futures if you definitely are day trading, intraday trading, or even swing trading, because the micros, like I said, if you don't have that much large an account, you can use it. Instead, if you're doing full contracts and you have a lot of money in your account, especially in 2022, because each contract's around 11, 12,000 now. You need quite a bit of money to do a full contract. If you're doing 10 contracts, you need quite a bit of money too, so you can manage it with the full contracts. But people that are just trading ETFs and they trade the QQQ and IWM because they don't have that much money in their account, you're being tricked. In my opinion, you should be trading futures, micros. Definitely a game changer. And like I said, by next year, in the next couple of years, you're probably going to have micros for everything. And ETFs, ETNs, especially those 2Xs and 3Xs, they're on their way out. Because people are starting to realize now, what am I doing? I can't trade these overnight. Something happens at 2 in the morning. I can't do anything. That's how they, basically screw you. But with the micros, they're leveling the playing field. So why won't you play on a level playing field? I don't know. Hopefully this video convinces you. If not, then whatever. Good luck. This video, hopefully you learned a lot, and hopefully you understand the hidden gem of why you should switch to futures. If you do not have a large account, you should be trading micros, and why trading micros is much more advantages than trading ETFs and ETNs. Switch to micros. I know that majority of the people on my forum, my community, like I said, 99% of them are now trading futures because of what I just detailed in this video. Guys, please like this video. Please share this video. Get this word out. There's a lot of people getting hurt there with these 2Xs, 3Xs, these 3Xs blowing up. All of a sudden, they're stopping trading. You're stuck. You can't even do anything now. The price is so low. You got trapped. You're not going to get it back. There's so many games they play with ETFs and ETNs. Micros, now that they offer micros, is a game changer. And that is the hidden gem. That is the hidden gem that they don't want you to know about futures. Hopefully you enjoyed this video, guys. Like I said, please like, please share, click the notification button below, because I'm going to be doing a lot more videos like this, educating the masses out there on the tricks and games the boys like to play and like for you not to know about. Kind of like this video, the hidden gem of futures, what they don't want you to know about. Take care, guys. Ciao, ciao.